Okay, Amnish Aggarwal, Director Research with Prabhudas, Liladher joins us. Let's take our conversation forward with him on the news of the day. And Amnish, the news story clearly is Adanis have acquired wholesome stake in ACC and Ambuja. Now, what does that mean for the sector per se?
Okay, you see, this acquisition per se, I would say Ambuja and ACC, they were operating more like a single entity only. But having said that, uh, one can presume that there is some consolidation in the sector which has happened due to this, and the large part of the capacity is now in the hand of, say, a few large Indian companies. So for the sector per se, I don't see that there is any big change as far as the operating metrics goes. But my sense is that given the fact that the way the industry is, that the raw material prices have gone up, the margins are under pressure, and the kind of valuations it has got. So I don't rule out that there will be some, you can say, your better price mechanism in the industry going forward. So to that extent, I would say that in the longer term, it can be positive. In the near term, it doesn't change anything in the industry.
So let's understand the valuation here, given the EV per ton, what has been given to this deal. Do you think there could be a rally in other mid and small cap cement companies, or you think we should not read into this deal because this deal also had some strategic premium?
You see, that is what I'm saying, because the combined capacity of both the entities was more than 65 million tons. That is one. Secondly, geographically, they were very widespread. So what it can lead to is that, given the fact that now, because Ambuja ACC, they had never tried to do any acquisitions or expand inorganically. Now, this capacity being with Adani, and the group as such has been aggressive in their other businesses, one doesn't rule out that they try to acquire some of the other, you can say, smaller cement entities to consolidate their presence further. So which might prompt some of the other number three, number four, or say some other players to look for, say, acquisitions to consolidate. But per se, that would play out on the longer term. I don't see that due to this, you can say, deal per se, there will be any re-rating of the stock or any leg up to the valuations of the sector as such.
Okay, I'm just going to look at the Sensex recovery. We are up from the day's low, and I think it's clearly evident in the way how markets are, are moving right now. Naresh, let's go to the importance of the recent low, 15,800, which markets, in a sense, broke on Friday. Courtesy global cues, today we've stayed above that. Do you think this market has made what is called as a classic double bottom?
So, say the double bottom, if you look at in terms of the last 2 days, it was 15,740. We say it's a double bottom, even if it's on a extreme short-term time frame like this. If it can cross the interim highs in between, which comes to 16,080. So, a double bottom confirmation comes above that. So, that is what is the trigger to watch out for. If we close above 16,080, that would be a confirmation of a double bottom in place.
Sen, Amnish, good afternoon. As to how you're reading into Bharat Forge's numbers, because the management as well in their commentary said that while there will be growth in key markets, cost pressures going forward are looking to ease, and supply chain tightness has given a fillip to demand across their geographies. So going forward, how are you reading into Bharat Forge's performance?
Okay, you see, the supply chain disruptions have been there from quite some time. And I think as the situation stands today, the supply chain disruptions, particularly in the auto ancillaries, they are likely to ease off, say, in the coming couple of quarters. So now, coupled with that, if you look at, say, a lot depends for Bharat Forge on that, how is the demand for, you can say, class 4 trucks and other commercial vehicles, more so in the developed markets like US. So not just the disruption, I think how the West behaves, particularly with regards to whether there are any recessionary conditions, how the demand goes out there. So I think that would be a key factor to watch out for as far as Bharat Forge is concerned.
Meantime, Naresh, let's get in a check-in on the charts as well. What's the outlook when it comes to Reliance Industries? Currently quoting at 25.35 after it's digested the kind of earnings as well as the choppiness in the markets. Given that we're holding out by about 0.5%, RIL to supporting.
So, Reliance Industries saw a much larger dip. It's been a stock which has corrected quickly from 2850 all the way down to 2400. In the last two sessions, it has started showing some strength. Would be more comfortable once it crosses 2600 as a trend changer. But for now, expecting a slow and steady bounce towards that 2550, 2600 mark in the near term. Would keep a stop loss below 2400 and expect that move.
Just looking at some of the buzzing names, well, the index is 0.5% higher, so we've eased off once again from the top. Idea, Balkrishna Industries, Eicher Motors, Bandhan Bank, India Cements, these are all names which are still continuing to hold out. What's not is Aditya Birla Capital, NAM India. Look at the kind of pressure that you're seeing on these particular stocks. And Naresh, this is exactly what I wanted to pick up with you, because AB Capital about an hour or so back was down a good 7%. From there, a mild bit of recovery, but the stock is still down 5%. And similar is the price action on NAM India too.
So the whole sector as such has been in a downtrend. So keeping aside the current announcement, which is not the announcement, the article which came up on Aditya Birla Capital, similar story which happened with another mutual fund a few weeks back. Out here, it is more like the trend is still weak. On that side, HDFC has been weak for quite some time. Nippon has been weak for some time. Aditya Birla Capital, on the other hand, was starting to show some recovery and had bounced back to 120 levels just 3 weeks back. But now is back below that price point of 95, which was the bottom in March. So if we can hold on to that 90-95 mark, which was the last breakout level as well as a very critical price point for the stock, I think it should again be back into a bounce back. So out of all the names, AB Capital looks relatively the better one. Today's news has had an impact, but if it can hold on to today's low, it could see a slow and steady recovery towards 110 levels.
Okay, those are the two charts which are looking fairly broken down in trade today. So is Hindustan Aeronautics, Berger Paints, Metropolis. You can't really pick up any trend of stocks which are under pressure today. Sectorally, chemicals, cap goods, media to some degree, even pharmaceuticals and technology are the ones which are relative underperformers as opposed to what some of the other stocks are doing. Rudra, two stocks for you, Hindustan Aeronautics and Berger Paints. Again, significant pressure here.
Aisha, Hindustan Aeronautic after its correction has taken clear supports at around 1460, and definitely this is a stock to be on the buy radar. And having taken support at levels closer to 1460, 470 range, today we can see some amount of bounce back. So I will be a buyer on dips to levels closer to 1500 zones, and I'll be looking at targets which can go back to its previous high levels of around 1700 to 1750. A definite strong stock, and one can accumulate it closer to levels of around 1500.
Okay, since we're talking about stocks which are under pressure and the ones that are holding up, let me quickly take it across to Pankaj, find out which are the big volume buzzers in this choppy day today. Pankaj?
Well, when we just talk about some of the names that are an unusual mover and definitely deserve to take a mention because of the volume and the price action. The first one on your screen, LG Equipment. Stock is up 14%. It's a stock which is buzzing right from the word go. And just look at the volumes. In the start itself, volumes are pretty high. Through the day, it was less. And then again, as we are closing in, the volumes are picking up. And you can clearly see a trend. Generally, we don't talk about this name. It was a 2007-8 favorite. And now you're suddenly seeing a breakout coming in with 290 rupees as far as price is concerned. The next one is Capri Global that we have on our screen. We'll just pull up the chart there for you. There you go, down about 2 to 3 odd %. But volumes on the stock are particularly high. And volumes on the stock are high because of the initial movement. Not that in the second half it's picked up. Second half it's broadly on the flattish side. So not that that is picking up, but overall you just get a sense that there is some unusual volume activity into this name. Price action at a point of time went down even further, but now I think with the markets recovering, this is also trying to recover. Let's pull up the third name that we have, and then we'll go to the unusual large cap movers as well. So we'll just pull up the third name. Okay, there you go, the unusual movers that we have. Avenue Supermart, it's a biggest name in the retail space, 10% higher. Bandhan Bank is up close to 6%. Again, it's a second day into the results reaction. And Adani Enterprise, when we took this, it was up around 5%, but I think it's given up some of the gains. Aisha, Avenue Supermart has seen about 3 to 4 upgrades, and one of the person who has upgraded is also from Prabhudas, Liladher, Amnish Aggarwal. The stock is up about 10% as we speak, 3,530.
Amnish, what is so interesting about Avenue Supermart? I am just looking at the most bullish estimate and dividing it with the market cap to understand the PE. It's trading at a P which is more than 100 times 1 year forward. What makes you so excited about this one?
Okay, you see, Avenue is a long-term story because organized retail, more so in food and grocery, it's a consolidated industry. So we have Avenue, we have, you can say, Reliance Jio, future retail is no more that relevant. And then maybe you are having, say, 1 or 2 players who are acquired by private equity players, and the entry barriers are very high. So we have a consolidated industry where organized retail is hardly, say, 3 to 4% of the total. So you have got a long headway. Your DMart ready is picking up. Last year they doubled the top line, and the most important factor in Avenue is that they have literally increased the number of stores by around 50% in the last, you can say, 2.5 years. Whereas due to the 3 waves of COVID, they have not been able to generate throughput commensurately. For example, in FY22 also, the number of bill cuts per store per day, which was at one point of time more than 2,850 odd. So that is still around 1,900. So you have got a huge headroom for growth, and inflation to that extent till the time it, you can say, results in down trading, it is retail friendly, because here we have the measures like SSG and not the volume growth. So I think Avenue has got a long way ahead of it, way ahead in terms of growth. And for any investor who is looking for the longer term, so if I take, say, 5-7 year kind of a view, then you will realize that the P multiples of Avenue, they are not that high in comparison to many of the other consumer names.
Okay. If somebody has a 5-7 year view, then perhaps Avenue Supermart could be a great idea. But in the near term, it's all about valuations, and valuations. What else are you telling your clients which may appear expensive, or these stocks do not qualify as value stocks, but you're still confident that in next 3 to 5 years, they can create serious wealth? I mean, 3 to 5 years, they could be 50% from where we are right now.
Okay, you see, from a 3 to 5 year view, one can look at, say, if I look at, say, first of all, the consumption space, then we are very positive on one name is definitely Avenue is there. Then Titan Industries is another one, which looks very good to me. Then some of the QSR names we are very positive about. For example, Jubilant is there, even Westlife. We are very constructive from the long-term viewpoint, because we are more positive on the discretionary space. VIP Industry is another stock, VIP, which I think it will create a lot of value in the longer term. I think from 3 to 5 years view, then you can say you can look at stocks like HDFC Bank, ICICI Bank. They look absolutely attractive at the current juncture. And then I think a few, you can say, names in autos, because autos, they have been suffering first from, you can say, downturn, then the COVID, you can say, waves, and then your semiconductor, you can say, issue. Now I think with all if the things are back to normal, then auto is one space which should go do well incrementally from here on. And one can look at, say, some of the select consumer durable stocks also, which have got beaten down significantly, for names like, for example, Crompton Consumer, which I think is trading at 27, 28 odd times now on FY24. So I think you can presume these are some of the names which we are, I would say, positive about. And in pharma side, you can look at, say, Cipla and Sun Pharma. They also offer value from the long term.